And joining us now for his outlook on the Philippine markets is Jasper Ondap, equity analyst of Regina Capital Development Corp. So good to see you, Jasper. Happy Monday.
Happy Monday, Kathy. Thank you so much for having me here.
Right, so what's the prognosis on risk appetites for a week that we're going to be seeing broader and wider tariffs with some of our trading partners, Canada and Mexico, as well as China?
Yeah, actually, when it comes to really of course, when what happened with the meeting with the current president and Donald Trump, everyone's really been seeking out safe haven assets. We can see most bonds really on the demand right now. And again, especially when it comes to putting tariffs in the US, it's mostly really in the other countries. It's really inflationary in nature towards US. So most imports that they have from Mexico and Canada will really come inflationary to their economy. And I guess that's what fears us when it comes to really when that becomes a positive or there's a significant action to be put out when President Trump implements his tariff. And then that would fear the Fed with regards to rate cutting. And then I guess most of the economies in the global scale would eventually follow on what Fed will do. So that's really the scale of the fear that will happening in when it comes to global economics and risk.
So what would that do for the Banco Central then? What's your prognosis and what would happen if we did have a rate cut?
Yeah, so we were still looking at 50 points this year, coming to 2025. But I guess if we're really looking at the data, we have an inflation within the target range. We have a peso actually fighting against the US dollar at around 57.9. I think there's really a room for the BSP to cut in a couple of meetings I guess at least a 50 basis point cut, and potentially that would really give the market an upside. So we're just really looking at right now because unlike last quarter, the fourth quarter, when the U.S. economic data was printing really strong data, in the first few months this year, they're already posting actually a weakness in their economic market, and that's I guess hopefully then I guess even then when they come up with a GDP that's actually lower, we're hoping that the U.S. Fed actually might become dovish coming up a couple of months and weeks as well.
So a rate cut would be a positive for equities, but government bonds have pretty much been the go-to in this risk-off scenario,
Yeah.
Jasper. So as an equity analyst, how do you justify that stocks are still worth one's risk appetites given the level of uncertainty and volatility?
Yeah, well, yeah, as you've said, that most funds are really going towards the fixed income or the bond side market right now, right? Because we actually see, even with the rate cuts last year, the easing cycle, we see still the BVAL rates at 10-year yields that's already since at 6.12. It's still pretty much high. And I guess looking at the performance of the market, people or funds will eventually prefer the fixed income market with that yield. But still, in the equity side, we still have these names or stocks that's actually giving out high yield. So right now, again, most of us, or at least in this type of stock picking market, eventually everyone's on a dividend play, looking at names or index names that actually pays out high dividend yields.
So what is your assessment so far of the earnings season and with the reporting of the blue chips, including a slew of the big banks in the past 2 weeks, and of course those that have already issued some share buybacks?
Yeah, so corporate earnings remain strong relatively. They're actually hitting the targets. When it comes to the market, yes, the index is actually quite dropping. But when you look at actually the corporate earnings or the performance of the index names or corporate names, they're actually hitting markets right now. They're reaching out a record high of revenues, net income at 12%, 11% gains. So it's not really an issue of corporate earnings that's relatively to the market, right? And we have seen now SM is actually putting out billions into buyback. So there's really a lot of companies now supporting their own companies because again, if we can look at the P/E ratio that we have, we're already relatively very cheap to where we're actually having a fair value. We should already be above 7,000 supposed to be by right now with the corporate earnings.
Well, stock pickers would be happy to hear what you just said there, a contrarian view as bonds are really rallying. Thank you so much, Jasper Ondap, Regina Capital Development Corp, joining us live.